Hey, good morning, everybody. Welcome to today. It's a great day, Monday, October 14th. Hey, just kind of a reminder, in case you haven't filed your tax returns yet, October 15th, tomorrow is the absolute deadline. Just kind of a reminder, folks. Don't want you to get caught short and not have filed your tax returns. So, hey, Dave will be with us in just a moment. Some interesting stuff happening in the trade talks. So we'll talk about all that in just a moment.
8:38 now and 75 degrees. It is Columbus Day. That means the Federal Reserve is closed. All the banks that are owned by United States-based interests, also for all intents and purposes closed. If you bank at a bank that's owned out of Canada, a couple of those are open today, but beyond that, it's a relatively quiet day, even though the stock markets are open. So let's check in and find out what's going on with them. Downtown Sebring is the offices of Statler Financial Services. And Phillip Statler is standing by there. Phillip, I was kind of giggling about the biggest market mover for today is going to be a look at the Halloween futures, because Tootsie Roll is going to report and give us guidance at the end of the day today. We'll find out how Halloween's going to be. And boy, that's probably the harbinger of a really quiet day, isn't it?
It really is. There's just not, we're at that point in earnings season where there's just not a lot going on from a company standpoint until tomorrow. Kind of the floodgates start to pinch open just a little bit, and with the banks, and then Wednesday I think we get a lot more. So Tuesday, Wednesday on the earnings front we'll have a lot more. On the economic front, we just don't have anything really today. And not much really tomorrow, Wednesday.
Yeah, understood. Well, they kind of clear out the space for us during earnings season and don't dump a lot of economic news. Then they close the government in a day which nothing goes on. And that tends to be the way it goes. Leakage and information that came out over the weekend, though, we had real euphoria at the end of the week last week over how great the trade deal with China was going to be. The Dow jumped up by 319 points on Friday, over almost 1.25%. Both NASDAQ and the Standard & Poor's both up over 1% as well. Then the weekend comes and we find out things aren't really as good as good is one thing, but not as good as everybody hoped. So we're not looking quite as cheerful this morning, are we?
No, we're really not. I thought like this headline I saw is "Hold the Champagne." It's what the Chinese media is really saying about the trade talks, and what I find is that they're really wanting to come back again and talk some more before they sign this phase one deal, is what they're calling it. Some people are calling it really just a temporary Band-Aid, but it's going to deal with kind of the agricultural issues. It's going to talk about currency and a little bit towards intellectual property rights. So a few things there. It did say that we wouldn't do that next 5% increase in tariffs that's set to take effect tomorrow. But basically, China says, whoa, we're not quite ready to sit down and hash it out. We want to talk one more time before we think we've got everything agreed to. And so that's really what's affecting the futures this morning.
I was going to say, my reaction on Friday when I saw the bits and pieces that we got out of the trade deal we struck with them, it sounded like almost capitulation on our part in exchange for a big agricultural buy, which, is important because that's the single biggest area that they import from us is our agricultural products. But at Friday's release of information, we weren't even talking about the intellectual property stuff, and that really is the part of the trade relationship with China that virtually all sides of the political spectrum agree on. They've been stealing our technology and then sending it back to us for money, and that honks all of us off. And we didn't even have that, as I understood it, in the first phase of the agreement. So now Mnuchin, the Treasury Secretary, says he's going to go over to China this week and talk about tying the ribbons on and doing some tweaking and fine-tuning. This deal ain't over yet by any measure, and the really hard stuff we just kicked down the road a little bit.
Yeah, that's true, Dave. And so who knows what's going to come out of it. I was reading one little thing that says, folks, don't trade, the China talks, because you will be up 1 minute, down the next minute based on what the president tweets and and what the news media puts out there as far as what's happening in the Chinese talks.
Understood. The other thing that's affecting us down the line is another trade issue. The Brexit thing appears to be getting closer and closer and closer to a dumpster fire exit for Britain, and they're also kind of in a state of flux right now. And that helps. That doesn't help a bit with our sense of good ease about another major trading partner going in the other direction. So we're getting kicked from both sides with international concerns that are kind of sort of out of control of the CEOs of the companies we're actually trading.
Well, that's true. I mean, there's nothing we can do about geopolitical stuff, and we've been dealing with or trying to deal with this whole Brexit deal now since it came out. And so, some people out there would like to just see it get done one way or another, but who knows what that's going to look like. We keep thinking it's going to get done. They seem to have issues trying to get it done over there, and so who really knows? But I did see something interesting when it comes to the European base, Dave, and it's the World Trade Organization actually came out in an article I read and said that they were supportive of the United States tariffs on some of the European goods that we put on recently.
We actually have some backing on some of the trade issues on our side of the fence, huh?
Yeah, that's kind of unusual, really, for the World Trade Organization to support us.
That we have not exactly been the most popular member of the World Trade Organization off of that, so that's a bit of a surprise, isn't it?
It really is. It's so, given there's not a lot to talk about today, I thought that was kind of interesting.
Absolutely. And as I said, we're looking at upset on both sides. The thing that surprises me as much as anything is with all that upset that's out of the control of the companies we trade, the interest rate on our bonds is still climbing, meaning that there's some faith in equities. We were up like 9 basis points on the 10-year Treasury bills over the weekend. The yield as of this morning on the futures market shows it up about 9 basis points. I'm wondering if that has something to do with the fact that the real bonds and the real sales can't happen on Columbus Day anyway.
Well, it could be, but the other thing I noticed is that I haven't really paid much attention to it lately, but it is, up quite a bit from where it was earlier in the month and the end of last month. So, we were trading down about 1.56, I think, on the U.S. 10-year Treasury. So up to 1.7 and some change is a good thing.
That's a real sea change. There were a couple of mornings in which you were saying it dipped below $1. It dipped below 1.5 for a little while in there, and now we're talking about a pretty solid 1.7 in a little bit. That tends to indicate a little bit, and I emphasize a little bit more faith in the equities markets, I'd assume.
Well, I don't know that I assume anything this day and time, Dave, but that would be what the educated people would think based on what we're seeing there, is that because the flight of safety is not really there, it's people are moving out of that. But the flip side of that, though, is I've seen several articles now that talk about how, we're seeing a mass move to money markets out of the equity markets. So maybe they're not going to the treasuries, but they're going to the money market accounts.
Oh, why get 1.7 when you can get nothing, right?
Well, that's right, but maybe it's because they can move quicker. I don't know.
That might very well be it. Once again, as mentioned, it's a pretty quiet day on Wall Street today because the markets are about the only financial tools that are open. Most of the banks are closed. Federal Reserve is closed. The government's shut down. We aren't even delivering mail today because Columbus Day is one of the official national holidays. Setting the table for the morning, Friday, as I mentioned, we continued euphoria off of the likelihood of a Chinese trade deal. Dow was up by 319 points. NASDAQ up by over 106. Standard & Poor's was up by over 32. It was an absolute good day, especially turned into a good week off of the Friday efforts because we had an actual green ink week for a change. 45 minutes before the markets open up this morning, Phillip, we've been kind of alluding to it. The bloom's off the rose, but it doesn't look like we've got a major sell-off going either, does it?
No, it's not a major sell-off, but we are down a quarter or a third of a point pretty much across the board. The Dow's down 75 points, the S&P 500 is down 8, and the NASDAQ's down 24. So we're seeing all pretty much red on that side. And then when it comes to commodities, gold and silver are both up about 0.5%, and we got crude oil trading down 2% this morning to $53.55, which is a little bit more than where it was Friday when you and I talked.
Yeah, it is, but it looks like we're trying to establish a new trading range, and a range that you and I wouldn't find uncomfortable at all.
No, we wouldn't. That 50 to 55, we're good with. It keeps gas prices about right for us.
Now, I think all the markets are just holding for the Halloween futures off of the Tootsie Roll report tonight. That's got to be the thing that's getting everybody on hold. Don't you agree?
Yeah. Hey, you know more about the Halloween stuff than I do.
If they're buying candy, the world's got to be a good place. Overseas markets, Asia generally evenly up over the weekend. As a matter of fact, at the close this morning, both Japan and Hong Kong indexes up pretty much in the 1% range. Europe, on the other hand, off of the upset over the Brexit possibly turning into a dumpster fire, their indexes are all heading down midway through their day. Phillip, somebody needs advice in order to figure out how to sort this out, because even the educated minds can't figure it out. How do I get a hold of you, sir, for some advice?
Dave, it's a process, and that process starts with knowing where you are. And if you don't know the risk in your portfolio from 0 to 100, then you need to give us a call right now at 382-0037 and schedule your free x-ray review to see how much risk you actually do have in your portfolio. And then check us out every weekend on the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 730 a.m.
And back here tomorrow morning, and since I had so much fun with it, I'm actually going to have to dig deep and figure out what Tootsie Roll did for tomorrow morning. Wasn't what I had in mind, but it was the best I had.
Yeah, you're going to have to do some homework now, buddy.
It isn't exactly going to make the headline in a Market Watch, because they'll have something to talk about tomorrow. Thank you much, sir. We'll see you in the morning, all right?
All right, thanks, Dave.
Be well. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Of all the questions.
Folks, again, I want to thank you for joining us. And remember, if you are 5 years out from retirement or you are already retired, it is vitally important that you know what your risk number is between 0 and 100. If you don't, you need to call our office and schedule your x-ray review, 382-0037. Have a great day. I look forward to speaking to you again tomorrow.